Welcome to the Economy Magazine at I-24 News, where we provide a daily view on world markets and the global economy. I'm Natalie Ehrlich. Well, coming up today, Israel joins a G8 task force dedicated to impact investing. And Donald Trump unveils his plan to cut taxes for millions. Let's start now with the financial headlines. Well, Asian markets plunged Tuesday on continued worries about China's economy. Japan's Nikkei finished 4.1% down, wiping out gains for the year. Hong Kong's Hang Seng fell 3.6%. Shanghai's Composite dropped 2%. Australia's S&P ASX fell 3.8%, and as for Europe, stocks there were mixed. London's FTSE off 0.4%, France's CAC rose 0.2%, and Germany's DAX up 0.3%. As for the U.S., futures pointed to a higher open. Well, meanwhile, Volkswagen remains in the crosshairs after the U.S. EPA disclosed it had cheated on emissions tests of its diesel cars. German automaker faces a barrage of litigation. Already, more than 24 lawsuits have been filed across the United States. And lawyers in the U.S. are also looking into filing class action lawsuits as well, estimated to number in the hundreds. Volkswagen says as many as 11 million vehicles across the globe have software which authorities say make the vehicles appear cleaner during those emission tests. As for Glencore, the Swiss mining and trading firm up 11% on Tuesday after falling 29% just a day earlier. A note from Citi calmed investors regarding the company's debt load, calling the sell-off overdone and also maintaining its buy rating. Well, 3 weeks ago, Glencore announced $10 billion worth of measures to reduce its net debt, currently standing at nearly $30 billion at June 30th. The company has been pressured by weak commodity prices like copper and coal, two of the firm's key earnings drivers. In Israeli market news, Delek will sell its remaining 66% stake in U.S. firm Republic Insurance to AmTrust Financial for $140 million. Delek's leadership indicated the deal is another step in its strategy to focus on energy and also shore up cash in its coffers. Well, several months ago, the firm received some 310 million shekels for its 34% stake in Republic. And Goldman Sachs cutting its year-end forecast for the S&P 500 on Tuesday, pointing to sluggish economic activity in China, as well as a global fall in oil prices. The U.S. Investment Bank cut its year-end price forecast to 2,000. It had previously forecast the index to rise to 2,100 by the end of the year. Goldman also said it expected the U.S. Fed to start hiking interest rates in December. Staying on the topic of rates, but in a different part of the world, we have Andy Bush, financial markets expert in Chicago. Thanks, Andy. Surprising moves out of India.
Yes, I think it was, and it certainly validates some of the cautious tone that we saw from the Federal Reserve. They cut their rates 50 basis points in India, surprising the markets, but it was 25 more than what we were expecting. I think they are experiencing what the Federal Reserve sees and what so many other people see is that there is a slowdown in economic growth from China, and it's really disrupting a lot of the markets, and it's really disrupting a lot of the global growth and economic activity that's out there. So today was a little bit of a wake-up call. One of the things I do want to point out is that they're going to allow more foreign ownership of Indian bonds, which I think will help India overall, and I think it'll help investors get access to that market.
All right, well, let's talk about the U.S. economy. Investors eagerly watching employment this Friday?
Correct. Although with a little less of an eye, because Janet Yellen downplayed it somewhat. We're expecting about growth of about 200,000 jobs, pretty consistent with what this economy has done over the last really 3 or 4 years. But I think what we're looking for, too, is to see if there's any acceleration in wage growth, which there just hasn't been very much. That's kind of a key relevant point for some of us in the economic space. I would just like to see solid numbers. I don't think the markets are going to react very strong unless we see a number below 150,000 or really above 285,000 with the non-farm payroll.
All right, well, let's talk about Boehner. What's the impact on the markets with his abrupt resignation?
Yes, last week, as you saw, the markets reacted negatively to this, and rightfully so. There's a core of about 50 conservatives in the House of Representatives that really forced John Boehner out. And it's unfortunate because Boehner has done a good job of keeping taxes low with the sequester and not doing the grand deal with Barack Obama back in 2012. I think it was 2012. The point is that they want to fight with President Obama over Planned Parenthood. Although the U.S. government will fund itself likely until December, watch for December, because I would almost guarantee there will be a shutdown. There's a risk of a prolonged shutdown, and that would be very negative for the markets.
All right. Well, thank you as ever, Andy. Very much appreciate it.
Thanks. Great to be on.
Well, Israel last week was selected as a full member of the Global Steering Group on Impact Investments, a part of the Social Investments Task Force of the G8. Now, for further insight on this development, we have Yaron Neudorfer, CEO of Social Finance Israel. Thank you very much for being with us today.
Thank you.
Well, how is it that Israel was chosen for this task force?
Well, a lot is happening in this market lately in Israel, in the social impact investment market. We see social impact bonds are being designed and will be launched very, very soon. Earlier this year, two first government social impact funds were launched in the size of 46 million shekels. We see more and more social businesses and businesses with mission, with impact mission being established. So a lot is happening, and I think this is noticeable. And the G8 task force has noticed it and invited Israel to apply and take part.
Tell us more about this task force. What is impact investing?
So the task force actually started under the UK presidency in 2013 in order to catalyze the global market of social impact investing and basically make social impact investing take off. Now, what is social impact investing? Social impact investment is really the field that combines entrepreneurship, innovation, and capital to benefit society. So you use investors' money in order to invest in something that you can not only measure the financial outcomes, but deliberately measure also the social or environmental outcomes. So basically, this is how you do well, the same way that you do good.
Well, in which ways do you expect Israel to contribute most?
So becoming a full member of the Global Steering Group, Israel has the chance to stand shoulder by shoulder with great economies like other members. Israel is not usually a member of this group of economies, of the G8, or now 12 leading countries in this field. I think that Israel has a lot to offer in terms of innovation, the same way that we did with the tech sectors in the 90s, where we established, now we lead the world. After establishing the tech sector, I think that Israel, being a startup nation, can also become an impact nation.
Interesting. Well, a number of other non-G8 nations are also part of this group. We have India, Australia, and also Brazil, which were added here. How influential is it?
It's very influential. You see that these are the leading economies of the world, sitting in the same room, exchanging views, involving all kind of players from the field, such as government representative, business leaders, the third sector leaders, and of course foundations, in order to think about the issues, to promote them, and set standards for other countries to follow.
Well, with Israel's addition to this team, does it give it more influence on the world stage?
I'm not sure if it's going to be more influential on the world stage, but we definitely have what to offer. We develop some of the most innovative social financial tools. I can mention one thing that we develop at Social Finance Israel is a social impact bond to tackle type 2 diabetes. Type 2 diabetes is a global epidemic, and if we can demonstrate that you can use investors' money in order to prevent or even delay diabetes, you do good both to diabetes patients, to the world, and to government that saves a lot of money on health expenditures.
Well, thank you very much for joining us in the studio today. Moving now to the U.S. presidential race, where Donald Trump unveils his tax plan, proposing cuts now for everyone. Daniel Russ has this story.
U.S. Republican primary frontrunner Donald Trump has run a campaign marked by outspoken anti-immigrant and anti-Muslim views. And this week, Trump has unveiled his tax plan, which he says will ease the burden on the poorest Americans.
It reduces or eliminates most of the deductions and loopholes available to special interests and to the very rich. In other words, it's going to cost me a fortune.
The Trump campaign says his plan will cut income tax to 0% for individuals earning less than $25,000 and couples earning less than twice that per year. And the ceiling for an individual would be 25% of earnings instead of just under 40% as it is today. But research group Citizens for Tax Justice estimates that under the plan, the bottom fifth of earners would get an average 1.6% cut, while the top 1% would see an average cut of more than 10% on their taxes, according to Vox magazine. As well, Trump aims to lower taxes on corporations to 15% across the board, down from 35%. In order to make up for the lost revenue, Trump has suggested he would renegotiate the North American Free Trade Act and rethink American military costs.
I'm also going to renegotiate some of our military costs because we protect South Korea. We protect Germany. We protect some of the wealthiest countries in the world, Saudi Arabia. We protect everybody. We protect everybody. And we don't get reimbursement. We lose on everything.
The Donald Trump phenomenon continues to gain ground. With over a year until the presidential election, the real estate mogul and reality TV star is leading the field with 21% of Republican primary voters saying they would vote for him.
Staying on the topic of Trump, we are joined on set for analysis with Neve Ellis of the Jerusalem Post. Thank you very much for being with us.
Thanks for having me.
As a Republican candidate, do you find this tax plan surprising?
Actually, no. If you look at it in comparison to the other plans that the other candidates have put out there, this is actually pretty much the most far to the right. There are some elements of it that when you look at them individually sort of pop out and make you say, whoa, wait a minute, that sounds like a liberal thing to do. But then when you look at it in the broader context, it's not. I'll give you one great example. There's something called the carried income tax credit that a lot of liberals really don't like. What it means is that hedge fund managers can take their income from managing hedge funds and claim it as income tax. Instead of claiming it as income tax, claim it as capital gain. So they pay 20% on it instead of almost 40%. Trump says, let's get rid of that. But then he also says, let's lower the top income bracket from around 40% to 25%. So it's one of those things like, yeah, he's taking out the loophole, but then he's making the entire rule very beneficial to the wealthy.
Right.
So it's the kind of thing that, you know, a lot of the Republican plans depend on this idea that, you know, if they cut a lot of taxes for the rich, that it's going to trickle down, it's going to boost growth in general, and that's how they're going to make up for it. But this plan essentially costs trillions of dollars over a decade, and he says it's neutral, it's not going to require more debt, he's not going to need to cut spending. He says all these things, but he hasn't really given any sort of credible ways to discuss how he's going to actually do that.
All right, so you don't think he's going to actually alienate any conservatives in his party here?
I don't think so. I think that the conservatives in the party are actually going to eat up this plan because this is exactly the idea. They want to see smaller tax base, smaller government. What he hasn't said yet is that he's going to reduce the size of the government in order to make it fit and to make sure that there's not an outrageous deficit. But if he's going to put a tax plan like this through, assuming he actually wins and manages to get something like this through Congress, which would be extraordinarily difficult, then, you know, it's that other side that he hasn't accounted for yet either. But that's certainly something that the conservative voters would like.
Well, do you think any independents or perhaps left-leaning or right-leaning Democrats might eat this up?
I don't think so. I think that they might take elements of it and say, you know, hey, look, we have the leading Republican talking about it. If they're talking about, you know, the hedge fund tax loophole, and if they're talking about, you know, he's also talking about reducing income tax on some of the lowest income earners. That's the kind of thing that the left can hold on to. And they might say, hey, you know what, if Trump is saying it, maybe it's something we can do. But they are definitely going to remove that from the greater context of his slashing taxes all across the board.
All right, well, let's shift back now to the Middle East. We have new information coming out of the World Bank on Palestinian poverty. Yes,
a new report came out today that basically said that even though the economy is expected to grow a little bit, the population in the West Bank and Gaza are growing so fast that per person, it's the third year in a row that poverty is increasing, that people are actually getting poorer in the territories. And what they're laying a lot of the blame at Israel's feet. They're saying, you know, if Israel didn't hold back tax revenue, if Israel didn't impose restrictions, that could help a lot. And they're giving a lot of credit to the PA actually for starting a reforms process that they said has been necessary.
Interesting. Well, do you think that we could see another intifada coming out of this?
The World Bank report specifically noted that this economic condition and situation, if it continues, that it's not sustainable and that it could lead to unrest. The question is, though, what form will that unrest take? They didn't specify what they think will happen. The question is, you know, are the people on the street, the average Palestinians, going to rise up in anger against Israel, or are they going to rise up against their own government, who they may see as responsible also for not helping them get their economy together.
And did this report have or make any distinctions between the West Bank and Gaza?
Yes, it did, absolutely. So Gaza has continued to shrink while the West Bank has grown somewhat in real terms, again, for the average Palestinian, because there are more of them. Overall, they're all getting poorer on average. But in Gaza in particular, youth unemployment is up to 60%, and that figure is much lower. Regular unemployment is in the 40s or something like that, in the West Bank. So there are stark differences, and they think that, the restrictions are bad across the board. They're much worse for Gaza for obvious reasons.
Most certainly. Well, thank you very much for highlighting this very important news. Very much appreciate it. That wraps up our show today. Stay tuned every day here from the Jaffa Port in Tel Aviv for all your global business and innovation coverage. I'm Natalie Ehrlich. Thank you so much for watching, and check out our website. It's i24news.tv.